Welcome to weekly view on markets. Markets have corrected during this week by more than 1.5% due to heavy selling by FIIs. DII buying has not matched with the FII selling, resulting in correction in the market. Volatility index has gone up by more than 26% as options premiums have started building up due to the election results. That is, the June series option premiums have started building up, and the option premiums builds up due to the an eventful things like election result. Options premium go up. Due to that, the volatility index rises sharply, and that creates volatility in the markets. Investors should remain calm as historically heightened volatility is seen before election results. I have seen this happening in last 3 to 4 general elections. Before the election result, the volatility premiums go up in the options and volatility in the markets also goes up. Traders should reduce their positions during volatile times. Indian macroeconomic data is quite strong and companies' earning growth is also picking up. So long-term investors need not to worry about this short-term volatility due to election results coming in the first week of June. They should remain calm and they should remain invested. Let us look at the performance of indices. Nifty has closed at 22,055 with a loss of 420 points. That is loss of 1.87%. Bank Nifty index has closed at 47,421 with a loss of 1,502 points. That is 3.07% loss. Mid-cap index also corrected, closed at 49,532 with a loss of 1,402 points. That is down by 2.75%. Small cap index lost 829 points. That is almost 4.90% and closed at 16,106. The volatility index has jumped by more than 26% and it is at 18.47. Just about a month back, the volatility index was at around 11. So this volatility will continue to increase as the election results come nearer. So the traders and especially option traders should be very careful about build up in option premium. Now let us look at sectoral indices. Except three sectors, all the sectors lost out during this week. Only FMCG, auto, and information technology remained resilient, and these are also called defensive sectors during volatile times. PSU Bank lost about 6.03%. Public sector companies, that is PSE index, lost about 4.87%. Media sector lost about 4.29%. Oil and gas sector lost about 3.89%. Commodities lost about 3.59%. Energy, NBFC, metals, private banks, realty, infrastructure all lost more than 2%. There was across the board selling during this week. Now let us look at performance of charts. This is the daily chart of Nifty. As we can see, it has been moving in this channel, and now it is at the bottom of this channel. So Nifty has got good support at around 22,000 levels. The long-term investors can look at picking up good quality stocks if Nifty falls below 22,000 levels. This is a chart of Nifty Mid-Cap Index. The Mid-Cap Index has been trading around this line. and now it has dropped below this. Next support level for Nifty is mid cap index is at around 48,700. So what I feel is that it will take support at these levels and stage a recovery as some of the mid cap companies are posting their results in the coming week, and results are expected to be good as corporate earnings are indicating a strong trend in the Q4 quarter. This is a chart of Nifty small cap index. Here we can see it has broken the crucial level of around 17,000. It has come back. If Nifty small cap index falls to at around 15,500 or 15,400 level, that is a time investors can look at picking up good quality small cap stocks. This is a chart of Bank Nifty index. Bank Nifty index has good support at around 47,000 levels. Traders can look at buying Bank Nifty if it comes at around 47,000 levels. And on the higher side, it has got strong resistance at around 48,000 levels. So Bank Nifty is expected to trade between 47 and 48,000 in the coming week. Now let us look at some of the macroeconomic and market fundamentals. Indian macroeconomic fundamentals continues to be quite strong. RBI forex reserves is at 641.59 billion, and it is up by 3.59 billion in last 1 week. Forex rate is at 83.50 per dollar. Dollar index is at 105.3. It is quite stable around 83.52, around 83.20, around that. And crude price is at 82.78. Crude price also has fallen sharply from around 1992 dollars per barrel. So the lower crude price is good for Indian economy, and that will also help the markets to remain stable. Gold price after hitting around 74,000 levels, it is come down. It is at 72,722 for 10 grams, 24 carat. FIIs have sold a huge quantity of 21,618 crores during this week, and DIIs have bought about 17,366 crores during this equity during this week in equity. DIIs have not been able to match FII selling. That is the reason we have seen correction in the market. IIP data for the March has shown a growth of 4.9% month on month and 8.2% growth year on year. This is a good figure of growth in IIP. IIP, that is integrated industrial production, constitutes 8 major sectors of the economy, and since this growth is good, it is indicating that all the core sectors in the economy are growing well. So they should be good for the economy, and this will result in good corporate earnings in the coming quarters. That is why we are seeing the markets is always trending to go higher. PMI manufacturing index has come at 58.8, and services index has come at 60.8 for the month of April. These are quite good figures. So PMI index above 50 shows that there is expansion in the economy and service sector. So 58.8 and 60.8 for manufacturing and services are good numbers, showing quite a bit of expansion in the activity. India VIX is climbing higher as option premium build up due to election results in the next month series. So investors should remain calm during this election volatility, as this is a temporary phenomenon. I have looked at pre-election results volatility index in last 3 to 4 general elections, and always the volatility index builds up before election results, because the election results is a big event. When the option premium goes up, the volatility index, that is the implied volatility goes up. When the implied volatility goes up in the option premium, the volatility in the market also increases, and India VIX will increase. So traders should be careful, they should reduce their size. Mid cap and small cap sector valuation seems to be quite high. Uh, Nifty valuation is at around 23 PE earnings multiple. But one good thing to note is that the dividend yield of Nifty from around 1.2, it has moved up to 1.36. So this shows the strength of the earnings of the Nifty companies who have declared results so far. So the dividend yield going up is a good sign that the corporate earning is picking up. So this will help the markets to scale higher levels in the coming week, and that will also give good returns to the investors. Mutual fund investors should continue their SIPs, should not get worried about day-to-day volatility due to events like elections, etc. They will get good returns, as Indian macroeconomic fundamentals have been improving steadily, and they are quite strong at this point of time. Investors should not get worried about this short-term volatility, and they should remain invested. This is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions. We'll meet again next week. Thank you.